Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Thanks for showing up for another episode of Zen and the Art of Real Estate Investing. My guest is Stephen Petasky of the Luxus Group family of businesses. You're going to hear all about them in my intro soon, but the Luxus Group has now become a multidiscipline company specializing in developing, managing, and servicing resort, residential, and hospitality real estate assets. You're going to like this show. Let's go. This is episode 222 of Zen and the Art of Real Estate Investing with my guest, Stephen Petasky. Stephen is the founder and CEO of the Luxus Group. The Luxus Group aims to provide an overall travel solution for affluent families seeking enhanced vacation experiences. I mean, you're speaking everybody's language of what they want in the future. Luxus Group also includes Luxus Developments, which includes Luxus Restorations, Luxus Vacation Properties, and a special project, the Ena Lake Lodge Private Fishing Club. Stephen, welcome to the show.
Thanks for having me, Jonathan. It's going to be a fun conversation.
Yeah, well, we were just having fun in the pre-call, and I'm like, oh, we better stop this so we can get all this good stuff on the show. But when was the first time that you remember being interested in real estate? Because I know that your parents were interested in this kind of like luxury vacation lifestyle, which led to what you're doing now.
Yeah, no, going way back, my parents had me when they were quite young, they were late teenagers. So they certainly weren't any, I want to say they're high school sweethearts, which was great, but it wasn't planned certainly that age. And So my parents started from complete nothing, and they built up a business, in the grocery business actually is where their passion was, where they kind of created their path and their career journey in life. And when they finally came into some money, it might have been about a late teenager by that point, they bought a vacation home in Scottsdale, Arizona. And that was kind of the first thing. Now I was just, very much in the business and trying to be like understanding entrepreneurship. And it's very lucky having that as a front row seat to see their struggles and successes and failures along the way. When they bought this piece of real estate, it was really neat because it was, I thought it was purely a lifestyle, but they ended up selling it a few years later and made a really big gain. Yeah. And it was like, oh, that was interesting. They made some good money on this opportunity. And then I think unintended, but I think as well, my parents were very good at picking the right properties, the right spots. So they did it again and then did it again. And it was never the intention. They always had this lifestyle targeted approach, but also let's make sure this capital we're parking has a chance to appreciate and grow. So that was kind of the first foray into it, kind of through, call it late teens, early 20s, watching that. And obviously having the wonderful opportunity to travel and experience some of these things. I started to develop a bit of a passion for it and said, I love travel already, and just said, well, maybe I should get in this game. And then we obviously came to a unique opportunity that created Luxus.
Yeah, it's interesting because I think a lot of times we look at our parents when we're teenagers and like, I didn't know what my dad was doing. But then one time he said, we're selling this house because we're going to make this amount. And I was like, okay, that even makes sense to me. Yes. I get it. So but also they obviously were way ahead of the curve because at the time that they bought in Scottsdale, it was like, pre-Scottsdale obsession, which is insane now. So that does show that tracking the markets is really the sign of a good investor who's ahead of the curve.
Well, and on that note, they sold, just before pre-Great Recession, took that money, then bought a property in an up-and-coming ski summer town, got a really big lift there. They were, they would say it's a bit of luck, but I know for sure the strategy they put into it is that they were definitely kind of the right time to enter markets and the right time to exit. And, you need some help along the way with a little bit of luck. No one could have predicted what the Great Recession would have brought, but they knew something was coming. Everything was inflated. It just seemed like the right time to move. And, in hindsight's 2020, but it certainly was because that was been worth a lot less 2 years later.
Yeah, but they practice something that I always practice and that my dad taught me that I think new investors or even novice investors forget that there's actually an enjoyment factor of real estate that you can maximize and still make a whole ton of money because your parents are buying properties for themselves. Maybe, I don't know if they ever rented them out on the side also, but you get the appreciation and the usability. And I think the kind of modern way of social media is almost teaching everyone, like, just invest, everything's an asset, which it is, but like, you can enjoy it. Luxury houses are great. Luxury vacations are great. So why not get the benefit of both?
I am a huge, huge believer in the entire company, the Luxus Group, and everything from people that invest with us and people that buy our products or people that partner with us and we manage our products. There's always some lifestyle component to it. And I'm not saying that's right or wrong. It's just the business we've chosen. There's people, you can make all kinds of money in multifamily and industrial and commercial, but I'm just not smart enough for that asset class. I've stuck to something where you know that even if it doesn't perform financially to the level that you hoped, if you got some unique enjoyment out of the process, whether it's building it or it's using it along the way or seeing the investment flourish in a way for something you can say, hey, I invested in Steve's project or Luxus project in Tuscany. I got to say I invested in a project in Tuscany. For a lot of investors that have excess capital, they've got a lot of their money at work with the regular stuff. So I'm a big believer in the idea of getting some utility out of the investment when you can. So that's what Luxus was kind of founded on and still is.
Yeah. And I mean, it depends on what people like. If people have disposable funds, maybe they do want to say, hey, I'm invested in something that's more luxury, even though maybe, a Midwest multifamily might churn more. That just might not be their bag because they're choosing the options. The returns may be similar. And also, it's nice to look at. Like, I was on the site for the luxury vacation rentals and I'm like, I want to stay here. You know what I mean? So you get this balance of like, it's a product that I also want to either strive to or go to at some point. And that makes, again, like we're talking about it, don't you think that people have kind of forgot about that? I mean, especially in the short term, whether it's, smaller units or larger luxury units, like the whole point of them growing up for us was my dad would buy one and then we would use it, 2, 3, 4 times a year and then rent it the other times. It's just makes sense.
Yeah, I mean, I think that a lot of people have, driven just purely on like, I'm going to say just cap rate. I'm making it up. It's like pure investment focus and sometimes forget about, especially when you're early stage, about getting this extra utility out of an asset, out of an investment. It'd be like investing in Exxon and getting, free gas at the pumps. Maybe that's not sexy, but there's a utility component to where your investments lie. And so I think that it's, it depends on where someone's with their investment journey, but I do believe everyone aspires to a certain degree of some form of lifestyle at the end of this game and freedom. And that involves, for a lot of people, probably the majority, travel, and doing cool things along the way. So we've tried to become a conduit for cool things. And cool things could be investing in one of our projects, or it could be partnering on a property to vacation manage. And we help give people that opportunity, just try to reduce the barriers to that, because we spent the tens of thousands of hours doing it. We've made all the mistakes. Probably still have many mistakes to make yet, but we can help people like grease the treads to get to a place where they limit their mistakes in this space. A lot of people, you probably experience in the short-term rental, I'm going to buy a short-term rental, but they don't really think about it through like a true investment lens. It's just purely lifestyle. And then they lose a bunch of money and I'm out of the vacation rental space. It's terrible. It's there is still a method to the madness and a science behind it if you're really trying to make sure you're maximizing both whatever lifestyle component that's important to you, but also the returns, which is a combination of, well, 3 things: tax, capital appreciation, and rental income if you choose to rent it. So we try to break down those barriers, those knowledge barriers, help people understand, and then we help them try to fit them into a bucket that can suit their particular needs.
Yeah, I mean, that's a great point, because we were talking about the enjoyment factor, but if that's the only thing that you like, you're bound to make a bad, bad investment, because then you're more emotionally attached. So that kind of delicate balance between the two is very important. And like you said, for busy individuals who have a high income, they don't want to go and learn how to do the short-term rental. So they can make mistakes if they're not doing it with somebody who's spent the tipping point 10,000 hours investigating the space and the opportunities and where's going to be the best yield and the most, opportunity for rental. And that's where you guys step in the luxury space for developments and short-term rentals, right?
Yeah. And it's funny, especially when it comes to vacation home, especially if someone's earned some money and they're making some money, buying a vacation home, say, is a rite of passage, but it's like a privilege that you've made some income to do, but no one generally spends the time. It's very emotionally driven. You're on the lake, you've rented a house,
Yeah.
with your kids, you're driving the boat around, and then you see a for sale sign on the dock, and you go pull up, and then you end up leaving with your 1 week vacation with $1 million vacation home.
Yeah.
You would never do that if you invested into a commercial asset or industrial asset, but we do it on vacations all the time. It's like the old timeshare thing.
Yeah.
You capture people and they're emotionally charged and spirited around that particular thing. But really what it should be is like, slow it down. There's always going to be a home for sale. And then do you like the market? Do you like that thing? Maybe there's a better home down in the lake or another part of town. And do you want to rent it? Do you not want to rent it? And that's where we find the mistakes are made, and that's where we're trying to help limit those mistakes because we've made those in the past ourselves. And we just take a bit more of an institutional lens to vacation homes, which generally no one does or very limited. So hopefully we've been able to add value to our clients for that.
Yeah, and especially on the luxury end, just because the buy-in cost is obviously bigger when you're doing luxury development or luxury short-term vacation, anything like that. There was a big difference. Like when I was younger, we would, 1 year, or we'd go multiple times a year to stay in a timeshare or short-term. What at the time was, you just go to the broker. We'd stay on Sanibel Island in Florida. But then like the next year we go to Club Med and I'd be like, oh my God, like this is amazing. Like, are you kidding me? I have all the meals and like there's sports going on all the time. So it's two different experiences. Both can work from a cash flow basis. But like you said, you're presenting an opportunity for maybe people to be aspirational about it also, but also to be a part of a bigger play that maybe is, visually a little bit more pleasing as well.
Yeah, absolutely. And back in the day when people were doing that, there wasn't the same. You could do your research, but there wasn't the same data available. Like there wasn't
None.
You had none. It's like you go onto the VRBO site and guess what you think is going to generate revenue if you took that step.
Yeah.
Now there's all sorts of tools, and we obviously have teams, both internal and external, that their job's to analyze it in a way so they can help. You can only build the crystal ball so bright to understand what the future looks like, but you can really, you use the gift of hindsight to prevent mistakes and increase your odds of success. I think a success is multiple buckets again in the space. It's not purely, financial return or like a rental revenue return. It's asset appreciation potential and of course a lifestyle component. And some people are like, hey, I made lots of money. I just want the home that I want and the rest doesn't matter to me. Perfect. Yeah. We're going to put 80% in that bucket and find the perfect home and care a little bit less. If someone's trying to say, I really need to get some asset appreciation out of this, then there's very specific markets and specific communities within those markets that will drive better asset appreciation returns if you just take the time to select correctly. So that's where we've had, probably most of our success over the years has been able to pick those homes because we've also picked the wrong ones. And as we've had funds and, multiple properties and over 100 million under management at one point, it's going to be a lot bigger soon, but we've also had the ones where we picked a little bit on emotion, didn't think it through, and those ones are worth the same as they were 8 years ago, while others have doubled or tripled in value.
Yeah, and I mean, there's the differentiator because if you're using it as a short-term rental, you can still maximize the income, and maybe you're not getting the appreciation, but your cash flow is still good. But if you're not using it for cash flow, if you're somebody who's buying a luxury and you're like, hey, I don't want any people staying in my place, and then you don't get the appreciation, then it's a very static, only an enjoyment play, like we were talking about in the beginning.
Nailed it. Exactly. That's exactly right. And everyone's got their own things. And I think that particularly with this is it's not just, I want to say like, let's just say, I'm just going to generalize that the husband's making the financial decision, but this is very much a family decision. It's the husband, the wife, the kids are sometimes involved, depends on their age, because you really want to say, if this doesn't perform financially, am I still going to have a kick-ass time? Yeah. And you want to be able to see if you can check all the boxes at the same time. And that's where it's fun talking to families when we're advising them on opportunities that we might have with us or outside. Is just like, well, what would my kids actually, they're 18, they're going to be in college next 5 years. They're going to want to come. I'm only going to see them in the summer. So let's have a summer spot that's going to fit what my kids are going to want to bring their friends. They're going to see more of them in the summer. Then we start to think that through to say, maybe it's not a desert property because it's 120 degrees. Maybe instead it's a ski summer property where the kids are going to come in the summer to the lake and you want that for that season of life of 5 years to enjoy the time with the kids. So that's all kind of part of like the probing questions we do when we're having conversation with clients to try to be like, I never thought about that. That's a good point, and then they start to make a better decision.
Yeah, I think that also makes me think of like generational travel and get-togethers because the larger units, maybe people didn't used to think before social media and things were easy to book online, that an 8-bedroom house would do well in the short term. But then you realize like, wait, people's families want to travel together. They want to get the cousins together, or, you have 4 siblings and they all have 3 kids. So now you need, you need a place with 14 beds. And these are the opportunities both, from an operator standpoint that can work, but also, like you said, for that big, person, maybe they have grandkids now and they always want to have a place where you can come to every summer where it's just going to be enough space and you're not cramped into something that you rented at the last minute.
Yes, it's for sure. And it's hard because, bigger the property, more expensive. But if you have the means, it really creates, at the end of the day, all we have is memories. The money's going to go to someone, charity or the kids or someone else. So if you can create some pretty special memories along the way and your investments will help facilitate that, then, why not think about it like strategically early on versus kind of Wild West, shoot from the hip, and help make a better decision. And we've been at this for almost 18 years now. So we've seen the ebbs and flows of families go through from babies to college and, teenagers to adults with their kids. Yeah. We've seen the multi-generational plays and how they've worked out. And it's amazing. And people trade, they retrade 5, 7, 8 year increments in life to something different that fits that next season of life. And that's totally fine. That's basically about real estate. You can sell it and you can make some money and you can buy something else.
Yeah. I mean, that's why we love it so much.
Exactly. Yeah.
Yeah. To pop back on your backstory, though, before you started the Luxus Group, what was your, interest in real estate? Had you already been investing in other opportunities, or did you go right into this being like, hey, I'm watching my parents do this and I think I can really do this on a big scale?
Yeah, you know what? It was kind of a neat story, but so it was 2006. My wife was pregnant with our son. And when we started that, we were in my wife was a journalist. She was a news anchor. She had a very fixed schedule. And then my parents were in the grocery business. And I was working in the family business and running that under the grocery store. So completely like separate industries and no relation to real estate. The only real estate investing was watching my parents, buy these lifestyle assets and see some returns. And so when that time came, we had friends who were like, oh, when you're going to have a child and travel sucks and you're never going to want to travel anymore and it's so hard. And we kind of got like, we really love travel. Like that's kind of what brought this courtship together in the first place. I'm not going to stop traveling. So what would travel look like for us and what would be ideal for this next season of life? And so we looked at 3 options. We looked at renting. Renting kind of was really good because you get the size requirements, involved to, have kids, bedrooms for the kids and everything else. But this is like pre-Airbnb days. It's just VRBO. And they still struggle massively with consistency, which we'll come to later in the conversation what we're doing now. But as a new family, you're freaked out a little bit about inconsistency. You want certainty when you're going to a property. So we kind of eliminate the rentals. Especially
the farther you travel. I mean, it's happened to me before. You go 3,000 miles, you show up and it's a bait and switch and you're like, what? Now what do I do? Now I'm stuck. I'm here. Now I have to find another place with 7 beds on short notice.
Oh, it's just so hard. Especially if you want to travel a little more exotically. We wanted to go Latin America and Europe with the kids and different things. And you're right. I believe certainty wins the day. So when we shifted, we said, okay, well, instead we could do hotels. Hotel provides total certainty, but it's expensive and small. You got to pay 3 meals a day. There's no kitchen. So that didn't serve us well either. Yeah. And then the third option was just, of course, buy your own home. You get certainty. You get set up the way you want. We didn't have the money to buy our own home at that time, but it was like, okay, we can maybe think about what an investment would look like. But the bucket it did not check, box it did check rather, was no variety. We didn't want to go to the same spot over and over. We're kind of, I would say, too young for it, but we wanted to see parts of the world. So we thought, well, wouldn't this be amazing? This is again, fall 26 or 2006. If we had a portfolio of vacation homes, all set up to our liking, so we knew exactly what was there. Playpens, booster seats, baby monitors, salon grade hair dryers, everything else. And we had the variety of it. And we also owned them. We had equity in these homes, so we could see appreciation. And that was the kickoff to Luxus. And we were still in our previous careers, but we started this and we went to build this idea. Thought, okay, this is going to be a syndication now, obviously, because we're going to have to bring some friends and family in. Let's go see if we can raise $3.5 million and buy $1 million properties. And we went ahead and kind of like pre-scouted and did the work. And we said, okay, we'll get a nice mix. We're going to have a beach home in Maui. We're going to get a desert home in Scottsdale. We're going to get a ski summer home in Western Canada. And we never quite knew the uptick, but we went to a bunch of friends and family and said, hey, this is like $200,000 each. We're going to raise 18 people, raise $3.6 million, and we're going to spend the money on buying these assets. And then what I was pitching at the time, like, we're going to build this big company and it's going to have like staff and asset managers and concierge, and you don't worry about anything. We'll just send you a bill at the end of the year for your proportionate share of the costs, almost like a private club.
Yeah.
And what I didn't realize at the time is how quickly people are like, man, I've been like waiting for something like this, because now I get 200 grand. I need 6 weeks a year of travel. And now I can do a golf trip, and I can do the beach, and I can go skiing or lake. And we ended up raising that money. So my parents put in there, kind of, we'll call it, make it all even, but 200 grand, we put in 200 grand, and we run 1,600 people, 200 grand, raised that money and bought these first 3 homes. And now it was like a real business. Now it's small, like we had no employees yet. We were just kind of in the infancy of it. But those 18 people told 18 people and told 18 people, and it snowballed very quickly. And over the course of about 10 years, we got to like 450 investors, about 100 million in real estate, 50 homes around the world. And we were the largest in North America for our version of our company. It was like, basically kind of like a private equity, private club, so to speak, for vacation homes. And, facilitated 20,000 vacations for our clients. And all of a sudden became a bit of a machine. And that was like the kickoff, and call it iteration version 1.0 of Luxus along the way. And I still think it's a great business. We've exited that, or in the final stages of exiting, starting a new version we'll come to a bit later. Yeah. But it was a really fun business. And for someone that maybe a listener that's looking to start something new, this space is interesting, like syndication of vacation homes, because as in our pre-call in the green room, it was like you get the benefit of capital appreciation. There's no rental income in this case, but you could work that in. That's certainly a hybrid model. But you get capital appreciation and protection, and then you also get lifestyle. And for a lot of people that have made money, that's what they wanted. They might have already had a second home, but this is almost like their third home. Yeah. And so we got a chance. My kids, we're all blessed, but had the opportunity to travel to all these great places around the world. I say around the world, North America, Latin America, a little bit in Europe, and in a way that was certain. We knew exactly what we were going to get. We had equity in that, and we had the size and requirements that a family needed for these types of hosting, these types of trips. And that was a kickoff to Luxus. And then 11, we sold the grocery stores, and then went full-time into this business the last, I guess it'd be 14 years.
Yeah, it's interesting, though. A lot of investors who find their kind of thing start with themselves as the avatar. And that's what you did. It's like, hey, what would we need? And then you liked it. So you told a couple of friends, and they're like, I mean, that sounds great. We can just kind of rotate between the 6 of us, these properties. But you're serving an avatar that which helps you build quicker because there's no unknowns. It's like, well, there's a lot of families like us with kids who'd like a nice thing that's kind of well thought out. It seems easy now, but I think, people sometimes they're trying to create a business and they don't even know who the avatar is. So how are you supposed to build a business?
I'm like very passionate about this. You brought up a great topic, because I think that when it comes down to trying to solve problems, that's all we're doing as entrepreneurs, right? Solving problems for other people, and they pay you to help solve those problems. Is if it's not a problem you're personally passionate about for you or your family or whatever it may be, it's going to be hard to catch up to the world and become like the subject matter expert in that space, because, passion, and I'm not saying that you have to be passionate about everything you do, but when it comes to this, I loved it. Like, so I got to 10,000 hours in a very compressed time period because I was thinking about it 24/7, constantly. That's all I could think about for years and years and years, and all I still think about. I think I mentor a lot of people, I'm sure as you do as well, is that they're like, well, I'm trying to find the thing. I'm like, well, what's a problem you have in your world that you're trying to solve versus someone else's problem for around? And I do think it's a great way, especially for like early starters, because you'll become more proficient quicker because it's a problem you want to solve for yourself. Yeah. And if it's a problem you have, guaranteed there's lots of other people have the same problem. And so I do think that it can help accelerate your career on a certain path. And maybe it's not the final thing you do.
Exactly. Yeah.
And in fact, in almost total certainty, it won't be the final thing you do. It's usually like the one of 5 or 6 or 7 things you do to find the thing.
Yeah, but it's the runway to the next thing. I mean, and that's correct. What's fun about it. Like you said, you're exiting something that in the beginning you probably thought like, oh, this is it. I found it. But then cool things branch off from it. And you're like, okay, somebody wants to do this. I'm going to move on and upgrade it to something a little bit different. And that's what I think people get, locked in. Like they say, well, I need to decide today that I need to just be an expert in multifamily. And they think that if they spend a year and then decide, I don't even like being a landlord, it sucks, that they've lost a year. You haven't lost a year. You know a lot about real estate. You also know that's not your bag. So quit it with the landlord stuff and get to something that makes a little more sense. So yeah, that really resonates with me too. And I think it does make sense. You're just quicker along if you're helping solving a problem. And also, like you're saying, if you ask them, like, what fills up your cup also? Why would you start to plan a career or build an entrepreneurial business on something that doesn't even do it for you? It's like, you're not going to be successful. You go to work every day and you're like so about what you're doing. That's not entrepreneurship. You're not going to succeed like that.
Well, I think the brain is like, certainly the world's most powerful supercomputer, and it can work at part-time, full-time, or overtime. And if it's something you don't enjoy, it's only going to work part-time. And then it shuts it off and goes to whatever passions. If it's something you'd like deeply love, it does never stops. Like you're solving problems in your dreams, and right before bed, at the moment you wake up, it's like Christmas morning, every morning waking up when there's presents to open because there's problems to solve. But if it's like, I got to get through this day of trying to solve this problem from 8 to 5, I just see so many people doing that, and they wonder why they're spinning their wheels a bit. To your point, I think people should try multiple things, 100%, because it's never a waste of your year of life. It's just a year of additional experience you have. But, if people could really focus on things that they love, I think, out of the gate, and then it will spin off other things, I just think they'll accelerate their career in compressed time. That's my thoughts.
Yeah. And to one of your points, just about kind of the obsession with the ideas that you're doing, like I always think of it, sometimes my kids are older, but I'll be with them and I'll just say like, hang on, I got to do a voice note, or I'll do it in the car. Like, I'll tell Siri something. Yes. And like that, like if you're not doing that all the time about the business you're in, like reminding yourself of stuff, one, you're going to lose those ideas because you just get busy doing something else. Mm-hmm. But maybe it's just not at the top of your mind enough to really make it go the way that you want. It might be steady, but as we were saying, is just for a brief part, people they always say they're chasing financial freedom, but as you talked about in the beginning, they're really chasing time freedom, the ability to do what they want, when they want, have the experiences they want at a greater level than they are currently wherever they're at. And so you need that kind of obsession, which people kind of take to the negative point. Oh, well, you're spending 24 hours. No, the obsession is going to get me more time with my family. That's the whole point.
Yeah, absolutely right. Exactly. And it's that. And the cool thing, especially if you have kids, it's something you don't love and you're doing it, you're really not going to talk to your kids about it, right? So it's not something like, I hate my job, but I'm going to tell you about my day. It's not something that happens.
Let me tell you about the toilet I unclogged today. You're going to love this when you're older. No thanks.
Yeah, you never know. Maybe you're the best toilet unclogger in the world, plumber in the world, and you're going to build this multi-scale plumbing business.
Oh yeah, I mean, if you're good at operationalizing a trade, you will crush it, especially now. So yeah, no, it wasn't saying like, I personally don't want to do it.
Yeah, no, exactly. It's just for me, no. It's something I would not enjoy, and if I had to do to make a living for my family, I would go, clean up porta potties. If that's what it took to make a living for my family. But am I going to love it? No. But what I do, I love. So I tell my kids about it all the time. So now my time with my kids is actually kind of part work and part family. Yeah. And so we talked about it earlier, but it's fun talking to the kids about what we do. They're very, as you mentioned, with your dad is like, I think with my kids, with me and my wife, is they're very in tune with real estate, probably more than in this particular space, more than most adults. And so for now, I get the twofer. I get a twofer of hanging with my kids and talking about business and doing something I love. And that's a double win.
Yeah. And I think it really depends, of course, everybody parents differently, but my dad was kind of an expert at delivering learnings all the time and then mixing in dirty jokes or talking about a video game. Like I wasn't going to school when I'm in the car with him, but he was constantly telling me about money when I'm 5. I don't know about stocks, but when I was 13 and he said, hey, here's some money, invest in stocks, here's your broker. I was like, well, okay, I do know stuff. I started to remember. So it's kind of that like osmosis way of learning, which is great for us as entrepreneurs and why you want to get in rooms with people doing other stuff so you can soak up that extra knowledge. So like you said, when you decide like, okay, I think maybe this business is capped out, I'm going to go to something else or to the side. Hey, it's Jonathan. I hope you're enjoying this episode with Stephen Petasky. And if you're already curious about the luxury vacation rental properties that Luxus VP has available, just take a break and do it right now. LuxusVP.com. You'll get to there. You can see that luxury is within reach. You can plug in where you want to go, guess, and you can see all of their properties that they have available. Let's get back to Stephen. How did you then structure what you went to from the original iteration of what you wanted to do at Luxus Group?
Yeah, for sure. So we did kind of almost like, we'll call it like 7-year increments, 7-8-year increments. But the first 7-8 years was all in on building that first version of Luxus. Then we talked about like the idea of like spinning off as we came into the development space. So our original thesis was creating development communities for the short-term rental industry. And at that particular time, the problem to be solved that we saw, which is still a problem that needs to be solved today, is compliance regulations are coming down because Airbnb was transforming the short-term rental space. So cities and states and countries were coming up with laws to regulate the short-term rental space. Never existed before. So our thought, we're a little ahead of our time at the time, but our thought was, let's build communities build a moat around them that are perpetually protected from short-term rental rules. It's not that easy, but there's a process, the city councils and everything else to say, okay, you are protected. And so we did 3 communities. We did 3 projects, I should say, a 17-home community in the Big Island of Hawaii, a 3-home community in Rancho Mirage, California, Palm Springs. And then we did a restoration project in Tuscany, Italy, which was more of a fractional revenue lifestyle approach. And so kind of looks like 3 random dots on the map, but it was because those markets were super high demand from a vacation rental use. They're, very good, asset appreciation, limited inventory, so on and so forth. And we had connections there that could help us kind of deliver an outcome. And we had 1 successful, 1 middle, and 1 kick in the pants. And it was good, very good learning. Those are, took roughly 6 to 7 years to mature. And what was interesting, the timing, maybe a blessing in disguise, was COVID, but right around 2020, they were maturing and we're trying to figure out what to do with the developments arm. And then our other funds that we had were also in their phases of maturing between 2020 and 2025. And we said, okay, COVID stopped everything for us. And in fact, it put us on the edge. Like, it was a very
such a weird time, especially when you have big projects going on. Like, I don't know when this is going to end also, especially like after the first 3 months when you realize, okay, that wasn't a flash in the pan. Like, we're going long-term on this. Yeah, it definitely could be an odd time.
It was brutal. And Italy was like, the epicenter of Europe for it. So for us, that was really, hard on our project. And cash flow was, zero. But in our rental projects, we took the high road and we paid back deposits to all the people who had bookings with us. And it was hundreds and hundreds of thousands of dollars, even though legally we weren't obligated, but we felt if we don't do it, they're not going to come back to us in the future. Yeah. So really is a difficult time financially. And we weren't sure what was going to be reinvented as a result of that. Were we going totally under? Are we going to maintain? Or are we going to grow? And so we did 2 things, and this will help illustrate where we are today. But we said on the first off of the development side, we decided on bigger projects, less of them, and said it takes the same amount of brain power to do. I'm going to go very big, $1 billion project to $100 million to a $10 million. And so I said, let's do something big. And we ended up coming across just a very special opportunities, too long for the podcast, but in Las Vegas, where friend had a connection with the guy and this whole thing kind of came together. But we ended up actually getting this really remarkable piece of land entitled for 2 luxury towers, 171 luxury properties.
Wow.
And that shifted in. And then when that got entitled, which was, where we learned kind of our secret sauce is around the entitlement phase, the higher risk, upzoning of land is kind of where, envisioning these projects. Four Seasons came in and we partnered with Four Seasons to become a Four Seasons private residential community. And that was a complete trajectory shift for the company. Years before that, we were trying to find our way, or we're doing more small communities. Obviously, it's a behemoth. So we brought in partners and capital partners and lots of people around, and our part got diluted down. But we own a meaningful piece of the project. And then now we're working with Four Seasons and now looking at other projects globally with them. So now that whole developments arm has shifted from these small one-offs to this partnership. But I think for anyone listening, it's, people said many times, one conversation away from a totally different life. I mean, that was us with this. For 10 years, we were grinding to find something. We knew we had good projects and good vision, but then someone saw that vision and someone staked us and someone, trusted us, and we've delivered on something special. And now it's changed the business forever. So so that was version 1 of the pivot post-COVID. And the second one was we had this large portfolio of 50 homes that we were managing and doing these vacations. And we decided, you know what? That business scale is quite limited. And we felt we wanted to do something with a bigger impact. We knew the lifestyle impact we're having on the people that were using our homes by providing this, disproportionately and remarkably better experience they can get with Airbnb and VRBO.
Yeah.
So we said that what is the limiting factor? And the limiting factor was us owning homes. So we actually decided to sell all the real estate, return the capital to investors, and start a vacation rental management company. So in that space, there's lots of them. There's thousands of them. There's big global guys and small guys. I'm not talking Airbnb and Vrbo. They're just distributors, but people that actually manage the homes as well.
Yeah.
In addition to rentally, distribute the inventory. Our niche that we picked, we spent a lot of time doing this to figure it out, but our niche is providing that hotelier approach and hotel certainty to vacation homes. And we believe, and I'm sure you probably attest to, Jonathan, it's like if you have two homes side by side and they're both in Hawaii or Bahamas or whatever, and you knew one was an Airbnb and one was maybe like on Airbnb or through Luxus, but you knew what your sleep was going to be like, you knew what the kitchen setup was going to be like, you knew how the remote control worked because it's the same TV in all the properties. Your wife knew what to expect in the bathrooms from a spa and robe experience. You would pick certainty over uncertainty. So we've really gone deep on this. Spent 2 years building the model out. Just launched middle of last year. Got 16 properties now. We're looking to be adding about a property a week going forward, and eventually be 400, 500, 600 properties in 5 years from now.
Yeah.
And our goal is just to give clients, whether you go to Tuscany or Maui or Cabo or Bahamas or wherever it may be, you're getting a different home, different furniture, different experience. But when it comes to those four pillars, the sleep, kitchen, bathrooms, and electronics, you're getting a comparable or very, very similar experience, and that provides certainty. So that was the big shift. And it's been a lot of work, 3-4 years, transitioning from version 1.0 to 2.0. But now we have unlimited scale, and we're ready to build something meaningful and impactful.
Yeah, there is a big difference there, because even if you're used to staying in, high-end Airbnb options that are all owned separately, it's still only a review base, and sometimes people say, well, the companies, they're going to systematize everything. That's not for everybody. But like you're saying, if you're going to spend whatever, $25,000 on a vacation, don't you want to know there's not going to be a kink in the armor there? And I think that's what you're saying. It's like, okay, wherever we go, what you were probably doing with your 50 other properties, but also that's operationally harder than what you're doing now. It's, it's for somebody else to do because maybe you grew out of that portion. Mm-hmm. But I also wanted to go back on the entitlement part also, because I think, a lot of people are in this very short-term thinkers now. A lot of people are looking to real estate investing to do something quick. And you didn't even fall into the entitlement thing later. Like entitlement, it's like you're doing all this work up front to get everything set. But then once that's finally done, it's just like a full go. And you can do everything because you've spent the time to do it the right way. And I think that's really important, because it's a different operational aspect. And like you were saying, much different partnerships. You need a lot more players in the pre-phase, and you already know what's going to happen after. Am I right about that?
You are, yeah. Entitlement phase, it's been interesting going through that and realizing that's something we found success in, is that we're comfortable with the risk of it. Because you're buying land at, pick a number, $1 million, and you're trying to make it worth $10 million through upzoning the value, getting the highest and best use out of it. The problem with entitlements is it can take a long time, can be very costly, engineers and architects in time, and city council, which usually, or town planning, usually what it comes down to, could say no at the end of the day. And you're out all your money and all that time. And so we only take on projects that we have, we can never say for certain, but with the highest degree of certainty of success at the end of the day, because we know that we're going to be out of pocket lots of money and thousands of hours, and you didn't want to get to that point. But when you do get to that point, that wing can be a 5, 10, 15x. If you're trying to, rezone a strawberry farm to an Amazon facility, that's going to be a big swing financially if you can pull it off. But you got a lot of work to do in that meantime. So my advice to people that want to get in this space, you have to be generally hyper local. You have to know the city, what the neighbors' feelings are like. What's the attitude of the community? What's the attitude of city council and town planning? Don't get into it just because it seems like which is a good idea. But if you have a knowledge in your local town to be like, I can convert this piece of farmland into a residential community, or farmland into a gas station or something like that, and you think you have a path to success because maybe your friend's the mayor, and he's told you we want more commercial, this is how you can win in the entitlement game. And it can be big swings. And then once you get to that point, it's a new set of partners. Usually it's kind of like pre-partners that are comfortable with the risk. Yeah. And then there's the partners after that don't want that risk, but now it's de-risked, and thereby they'll provide capital and stuff to build it out and go from there.
Yeah, and I mean that, you're following along with things that we've been talking about. You're getting the right people involved so that you can get through to the next level. And I think it is interesting. They said those are different type of players. Your people who get you there, like, yeah, that was what I wanted to do. But also, it also goes to knowing the locality, making sure that you're building the right relationships. Because yeah, if you don't know and your expectations are, hey, well, I just want to build a hotel here, and you haven't, even taken the temperature on the town, you're just setting yourself up for a disaster. So you're looking for things that are not sure things, but that you already know the overwhelming sentiment from the areas like, hey, we need this. And that goes back to really where we started, that you're just solving someone else's problem or a need that they have. And that goes to a lot of redevelopment areas where people are all doing. If they're telling you that they need more multifamily, it's why, I know you're headed at some point to San Diego, but San Diego and a lot of the West Coast has opened up ADU, rules on purpose because they need more, opportunities. So if you go there and you're like, hey, I want to get into ADU, great job. But if you say, hey, I want to just check out Minnesota for ADUs, I don't have any evidence that they're even interested in that because they don't have the same type of shortage. So that's knowing your market and making the right relationships. So at least, like you were saying, your risk is still very educated and also built on trust that you've built, but still a risk.
Yeah, it's funny you say San Diego, the ADU thing. You're 100% right. Is that I've got a few buddies that are in that space that are doing that, and they think there's a 5-year window before parking issues become an issue.
Exactly.
If you can know what the city's problem is, what the city council's mandate is, slightly ahead of the curve of the world figuring it out, because you can make you can become the player in that space for that season of that city council, 4 to 10 years, whatever it may be.
Yeah.
I've got some guys killing it on the ADU thing in San Diego. They're like, I got 5 years, and they're raising money and they're getting after it because they need to add something like 80,000 ADUs. And so they found their space, and that's don't enter a new market. Just, I want to build a hotel here but maybe a city says we need more hotels. Yeah. We want to be a bigger host for these types of conferences. And you're gonna find land, and they're gonna grease the treads on zoning that farmland or that other residential property and rezone it to a hotel, hospitality land, and that's how you can make the wins on the entitlement side.
Yeah, and to your point, especially since we're just using San Diego as an example, but it applies to Seattle as well. They're going big on it as well. In 2.5 of that 5-year window, they're going to start saying, okay, now we're going to look for places that we can tear down for parking, because parking is going to be the biggest issue, because they're, like you were saying, they're allowing so much. They're even reducing the parking laws because they need to get the housing in. But where are all these cars going to? It's not like there's not a train line running through there that I'm aware of. So again, it's like you said, you do that for 2.5 years, and then if you're ahead of the curve and you can smell it, and you're like, okay, let's not do that next thing. Now let's focus on the next problem. That's your success path is right there, because then also you're staying in the market, working with the same people, helping them solve the same problems, and they already trust you. So if you move on to now the parking solution, they're like, oh, well, they already solved, 1,800 extra units that we needed. Let's help them, with some grants when we go into the parking phase.
It's so true. If you can build a reputation in the city as someone that gets something done in a way that it's the town planners like and the city council likes. In town, city councils come and go, but town planners are there generally for careers.
Yeah.
And if you get that, they'll recommend to say, oh, these guys can shift from ADUs to parking or to hotels because they've gotten it done. Here's their track record. The problem with it, I think a lot of people on the entitlement side, is it takes a long time to build that credibility. It took us 10 years, 12 years of doing things to build any sort of credibility in the space to say that now the opportunities come easier, the conversations come easier. So, but I think people, to your point earlier, want something so quick.
Yeah.
If you just say in your 30-year, career history, you made zero money in the first 20 years and 100 million in the last 10 years. Yeah. Would you still do it? And now, of course, you don't know. That's the whole thing of uncertainty of entrepreneurship. But your odds increase substantially if you can play the long game on these things versus the short game.
Yeah, I mean, it's the classic cartoon of momentum. There's somebody pushing a rock up to the top of the hill, but they've been doing it for 20 years. And if they just did it for 20 years in a day, it would go and they'd have unlimited momentum for the rest of their life. They got tired. They're like, you know what? This sucks. I'm going to give up today. And there's one more day would have been it. So, I mean, that's really it, though. I mean, if you do anything long enough and you get better at it, you're probably going to be successful. unless
And
you're,
if you like what you do, the painful parts are okay. If you hate what you do, it's you're gonna quit. That just is what it is. You probably should quit. Be someone who loves it's going to do better than you. But if you do love it and you're down with the long game, there's all sorts of success in the long run for sure.
Yeah. Yeah. So, I mean, what's the most fun part for you? I mean, is it the delivery, like once this is done and then you can start delivering and you realize like, wow, look at the enjoyment that people are getting out of the lifestyle that you thought of based on, what your parents started doing. That's just cool.
I think the beginning and the end are my two favorite parts. And maybe that's probably typical for some visionaries, I guess.
I mean, none of us like the middle. It's the worst.
No, I'm very blessed to have a great team of people that love the middle.
Yeah.
And I realized as I participated in the middle for 20 years, I'm honestly not great at it. I can muscle through and I can master monotony and get through it, but there's better people that love the middle.
Yeah.
They don't have the vision to create it. And then the end, sure, it's a win and feels good when you're handing over, like we just turned over one of our luxury villas to a family from London, this past week. It's a 3-year process. And it's so exciting because like you see them and see the completion of the whole thing. But the middle part, I helped them select it 3 years ago, but the middle part was what our team did. So you got to find, like, that's how you build a team, obviously, is people that are not your skill set, someone else's skill set, so that they can ultimately, everyone fills a bucket of the journey of a development project.
Yeah, and that's also being upfront about the timeline too. That's really important when you're delivering on things like luxury development. You can't expect, tell them like, hey, yeah, sure, we'll knock this out in a year when it's not, because then you're going to have disgruntled people. But if you tell them, look, this is usually right on 3 years, we're pretty good at sticking to the timeline, and then you keep updating them, it's like, okay, we're following along. Nobody, overpromised. They just said the timeline, they stuck to it.
Yeah, exactly right. And you, unfortunately, I've overpromised, underdelivered. I think as an entrepreneur have it. It was completely unintentional.
We get excited,
You get excited. Like, oh, sure, we can do this in 2 years. That's what everyone says. And it beats 3. And you got to have that painful year and painful conversations. Well, next time I'm telling it's 3.5 years and deliver it 3 years.
Yeah. So, I mean, what are you looking forward to in the future? Obviously growing some really big companies and in the luxury space, but is there anything on the horizon that is like kind of something new that you want to do?
Well, it's one thing my team's done a good job with is rein me in, I think, is that I was starting to do too many things and then doing them averagely versus one or two things doing them well. And so I think for 15, 16 years, we were trying to figure out the things we're good at, and you try lots of things. It kind of goes back to our previous conversation.
Yeah.
Now, as much as, we've got lots of opportunities put our way and they're all kind of sexy and fun and cool, we're really focused on Four Seasons and luxury master plan communities. And we're focused on this global short-term rental, branded experience.
Yeah.
And sure, in 5 to 8 years, if they sell or mature or whatever the case is, it'll be a new season. But I kind of look at everything in these 7-year increments, and now just get hyper focused for 7 years. And then people have a tough time thinking that long out, but I just know from now for the next 6-7 years, I have my 2 purposes and that's it. And really my partner runs the development side. He's the 100-hour-a-week guy on that side.
Yeah.
Is that I just want to see these things through for the benefit of the clients and the benefit of our investors, and exclusively just give everything I have into that. And if they're successful as we hope they'll be, then there'll be lots of other cool things to do at that time. But I've definitely been able to laser in a bit better since COVID about what we want to accomplish. And I'm proud of that for myself. It's hard as an entrepreneur sometimes to limit what you're doing. But I also don't think it's limiting. I think we're going to create a lot of pretty cool jobs and cool projects and opportunities for people.
Yeah, and like you said, more focused on less things. I mean, my word for 2025 is less, but it's not in a like, I don't want to have less enjoyment. It's just a less is more philosophy. Focus on less, get more value out of it. And that's exactly what you're saying. And it really does make sense in the real estate field. I mean, no one really is going to be an expert in multifamily, short-term rentals, self-storage. Like, you just have your hands in too many cookie jars. Correct. Like you said, jack of all trades, master of none. Can that work? Yeah, but it doesn't work at scale. You can't scale opportunities in that. And that goes back to the 50 separate vacation rentals. Operationally, that's tough because it's different operations for each area. But then when you go to what you're doing now, it's a different experience because, like you said, you're bringing in this brand and all the locations. So it is the operating system's the same.
It's true. You're right. And now we want to get, like, one thing we learned, like you said, 50 homes in 34 different markets, whatever it was. We want to have a regional scale, 10 to 20 properties per. Then you can have a full-time person,
Yeah.
A general manager of that area. And it starts to simplify some of the operations that we learned, the hard way. And we did a good job for what we were doing. But at the same point, 100% nailed it, not scalable.
Yeah.
And you can't have 100 properties, 100 destinations. You'll fail. So instead, we want 500 and, 30 destinations or whatever the case. And then we can really kind of scale up regionally, utilize the head office, is called the global, the head office scale and infrastructure to support the regional offices and allow them just to be successful by kind of clearing a path for their success.
Yeah. I mean, I think hotels are a great example. Obviously, you're now partnered with Four Seasons, but if you look at the history of hotels, what they did well was operationalize so that they could do their system in any area. They still had to buy correctly, put the hotel in the right spot that's attractive for people to go. But once you do, it's nice to know there's a reason why all hotels have, Hilton rewards or Marriott rewards, because it's just like, if you like Marriott, why would you go to a Hilton? You already have all your points and miles, and that's what you're trying to do here with luxury. I really like the idea, and I think, overall, again, if we go back to you as the avatar, it makes sense. You don't have to try to serve an average. That's what you would want, and most people with kids want that, something that's not a surprise when you've just, traveled 14 hours on a plane with 3 kids and they're starving. You don't want to pull up and like, oh, wait, your room's not available. Sorry.
Food's not available. The pool's not turned on. There's no groceries in the fridge.
Yeah.
The heat pump doesn't work. We've all been through it, traveling that way in the past. And I just, that especially for those that are, I'm in the business of it, but for those that are working a different career, and that's their 1 or 2 or 3 vacations a year, it's so easy to be disappointed, expectations not to be met.
Yeah.
And I think that our industry sadly does not meet expectations consistently. People get loyal to a host or a property, they do a good job. And they're loyal to a brand and a hotel. If we can merge those two together, and you mentioned loyalty, we actually have a loyalty program attached to ours as well. So again, thinking that hotelier lens on vacation homes, if we can create loyalty within Luxus, we have we're solving a complicated problem. If we can solve that problem, it should be a very valuable business down the road. So it's lots of fun. I think that if I'm looking forward to anything is solving these problems. They are, I think as any entrepreneur, there's nothing better to have something that's complicated that comes your way and you figure out how to make it better.
Yeah. Before we hop off, I mean, I can take that last statement and just literally put it to any part of real estate. If people are just thinking about off-market acquisition, people are always thinking, oh, I need cash. I'm like, all you're doing is solving problems when you're buying one-to-one houses off-market. And it goes up the same way. You're buying from a self-storage mom and pop operator. Got to solve their problem. What's their problem? They're tired of doing this. Everybody has a problem, and look at what you're doing. You're talking about giant developments, still just solving a problem of either the area or the person who's selling you the property.
Yeah, and there's a bit of this when you have a wide range of listeners. You have people that are just starting, people that are already past many years where I'm at.
Yeah,
and it's like, I think it's like this limiting belief. People talk about. It's like, well, am I trying to solve a really small problem? I want to make my first $20,000. Yeah. Well, a house flip's a great way to make your first $20,000. And then you do 2, and then you do a 4, then you do an apartment building. Like, it's all just like it's just a journey that you're on to kind of build to that place. Solve it, and eventually, your problems, your mindset grows, and as a result, the problems you want to resolve are bigger, and you're willing to take the risk to solve those bigger problems. I never thought 15, 16 years ago we started this that I'd be trying to solve these types of problems at all. I thought people think and I had a big vision at the time, frankly. It was ambitious, but I never knew how to get there. Now you get a lot more clarity through maturity in business, and I'm still going to stumble and still going to get punches in the throat, and that's all part of it. But I'm comfortable we'll find our way through it because you've been through enough of the hard times. So failure is a part of the process. Everyone says it. It sucks when you're in it, but it's just part of the journey. Yeah,
well, it's like the Ryan Holiday book, The Obstacle is the Way. Like, you're only getting through one way. So if you want to get to the next level, you just got to, again, that's another problem solving. There's an obstacle in your way. Right. How am I going to solve it? Then once you solve it, you're like, ooh, that unlocked the next level. It's just like a video game.
Yeah, it's just I'm like the total video. I never heard that one. That's a perfect analogy. Exactly. Love it.
Yeah. Awesome, man. Well, I really appreciate it. Is the best place for people to get in touch with you and find out information at the hub site at luxusgroup.com?
Luxusgroup.com. And then for the vacation property side, it's luxusvp.com. So just very quick history on the name, but Luxus is a lot of people think it's a spinoff of the car company. It's actually, Luxus is the Latin word for luxury. And so that's where we did this big name search, and it was crazy. But the first name we came up with was Luxus, and we got it trademarked, well, we were in North America, but now through Europe and other parts of the world. So we kind of got it locked up. But Luxus VP, if you were looking to book a vacation, if I just say one shameless self-promotion is looking to book a vacation, go there. And if you're a homeowner of a vacation home and you want someone to manage it, we love the opportunity to talk about earning your business if it's a fit for the portfolio. So that's the best place to do. There's info links and everything. And then my Instagram is at Stephen Petasky, but I do not put a lot out. To be perfectly honest, I'm not kind of built this all anonymously. I prefer that, but you can see some random pictures of our fishing lodge and things, and you can hit me up on a DM if someone wants to use that as a channel as well.
Yeah. Awesome. Well, it was a great conversation. I really enjoyed it. And I look forward to staying in touch, man.
Yeah, to you as well, Jonathan. Great conversation. Congrats on your success. And thanks for doing 222 episodes and many more to come.
Yeah, appreciate it. All right. That was Stephen Petasky. He's the CEO and founder of the Luxus Group. You can find them at luxusgroup.com and those vacation properties, luxusvp.com. I'm Jonathan Green. We'll see you next episode. Thanks for sticking around to the end so you can get a preview of who's coming up on the next episode of Zen and the Art of Real Estate Investing. And it's Whitney Elkins Hutton. Now, I saw her at the last BP Con, and I knew I wanted to get her on the podcast. She has a proven 4-pillar framework: create, keep, grow, and pass wealth. She helps you simplify wealth, build, and take actionable steps toward financial freedom. And that's all part of her story. We'll see you next episode.